Time for some tax tips for people who have still not filed their taxes yet. We are turning to Jim Uren of Phase 3 Advisory Services. Thanks for coming on our show, Jim. And what do late taxpayers need to know? And when is it a good idea to file your taxes at a later date?
If you need to take an extension, unfortunately, you have to have filed for an extension by the April 15th deadline. After that, there's no extension granted. So you would have to get going on your taxes right away. But the advantage of filing an extension, if you did, there's a few reasons that it could pay off. First, you may not have been able to meet the deadline, in which case you could avoid filing late and avoid a late penalty. And filing an extension can also potentially increase the accuracy of your tax return. So if your tax situation is particularly complex, filing an extension may save you the time and tax preparation cost of having to file an amended return later in order to correct any errors. And of course, another advantage of filing an extension is that it may allow more time to fund a self-employed retirement plan. So for example, when self-employed business owners with a SEP IRA, when they file an extension, they would now have until April 15th to come up with cash to fund that SEP IRA. And of course, this can increase tax deductions.
Who pays a penalty for not paying taxes on time? Because the clock is ticking for some people.
There's not a penalty if you get the extension filed in time, as long as you then meet the second deadline, which again is going to be around October 15th of every year. But if you miss that deadline to file the extension or your taxes, then yes, the clock is ticking. You likely will be subject to some penalties. But the sooner you get that tax return in, the less severe those penalties are going to be.
What are the downsides of delaying filing your taxes?
Well, one of the biggest downsides is that, unfortunately, what people don't realize is if you file an extension, your tax bill is still due by the original filing deadline, typically April 15th most years. So in other words, an extension does give you extra time to file your taxes, but not a lot of extra time to pay your taxes. You still need to estimate what you'll owe, and you need to make sure that you get that amount to the IRS. The other downside of an extension is that it may delay your refund. Now, if you're owed a refund, filing an extension will just delay when you get that money back. Now, that can be especially long nowadays since the IRS is so far behind on processing tax returns. You may be waiting for that refund for quite some time. The final downside is that filing an extension will not give you extra time to fund your personal IRA. So unlike the self-employed retirement fund we mentioned earlier, a tax extension unfortunately does not let you fund your Roth IRA or your traditional IRA past the initial filing deadline.
Isn't the rule of thumb, though, to try and make the April tax deadline if you possibly can, because you can always make an amendment later?
Absolutely. The sooner you get it done, the sooner you get your refund, and the sooner you find out if you happen to owe any money, that you can be prepared to be ready to pay that tax bill.
Thank you, Jim, for your tax extension tips.
Absolutely. Thank you.
Go to businessfirstam.com for where to see our show on TV.